Welcome to this explainer. Okay, today we are digging into something that is quite literally reshaping the financial landscape right now. I mean, look at India's digital finance boom. It is absolutely staggering. We've got AI doing underwriting in seconds, seamless digital onboarding, and these wildly complex APIs powering our mobile banking apps. It's rapid, it's incredibly innovative, but here's the catch. With this massive digital footprint comes a massively expanding cyber attack surface. The stakes? They have literally never been higher for fintechs and NBFCs. And you know who has taken serious notice? The Reserve Bank of India, the RBI. Okay, let's dive right into this. If we comply with regulations, we are secure. I mean, it sounds completely logical, right? But I've got to tell you, this is actually one of the most widespread and, frankly, one of the most dangerous misconceptions floating around in regulated industries today. Believing this one simple statement leaves incredibly innovative fintechs completely, dangerously vulnerable to modern threats. Because, well, here's the harsh reality. Ticking a box on a compliance checklist, that is absolutely not going to stop a sophisticated AI-driven cyber attack. It just won't. Compliance is just the baseline. It's the bare minimum to get in the game. Real cybersecurity requires continuous, real-world validation. We really have to shatter this illusion that just being compliant means you're magically shielded from the bad guys.
Think about it like a trip to the dentist. Compliance is your annual checkup, right? You go once a year, they sign the paperwork, and you move on. But true cybersecurity? That's brushing and flossing every single day. That's your continuous risk management and your real-world validation. And this direct contrast is exactly why the RBI's 2026 guidelines are demanding a total mindset shift, moving from static, point-in-time compliance over to dynamic, proactive security. Well, it's no longer optional. It's now a strict regulatory expectation.
So why is the RBI coming down so hard on this right now? Well, just look at exactly what's at risk. Unlike your average enterprise, fintechs and NBFCs process a highly sensitive, deeply interconnected web of data. We're talking about the absolute holy grail for hackers. Your customers' entire financial histories, live payment transactions, complex credit decisions, and super sensitive identity documents like KYC info. Because you hold this specific treasure trove of data, financial institutions are absolute gold mines for attackers. A single breach here doesn't just disrupt your day-to-day operations, it utterly destroys customer confidence and brings immediate, heavy-handed regulatory action down on you. To counter this massive threat, the RBI has stepped in with a definitive framework. Specifically, 5 core expectations to build true cyber resilience. Okay, expectation number 1, IT governance. And this is a massive, massive shift in responsibility. Cybersecurity can no longer just be shoved off to the IT team sitting in a back room. No way. It is now a strict top-down mandate. The RBI expects cybersecurity to be governed at the absolute highest leadership level, complete with direct oversight from the board. Every single security decision has to align perfectly with your overall business objectives and your specific risk appetite. Bottom line? If the board isn't actively involved, your governance is failing. Expectation number 2 is cyber risk management. Basically, this means completely ditching the old wait for the annual audit mentality. You have to be continuously evaluating vulnerabilities across your entire ecosystem. That means your critical assets, your cloud environments, and all those APIs we talked about earlier. Hunting for emerging threats has got to become a regular, baked-in operational habit. You've got to find the vulnerabilities way before the attackers do. Now, the third expectation exposes a major and honestly highly ignored blind spot: third-party risk management. Look, modern fintech ecosystems are built on a mountain of external connections, right? Cloud providers, payment gateways, SaaS platforms. Your security is literally only as strong as your weakest cloud provider or API partner. So rigorous vendor due diligence and continuous monitoring of those external partners, absolutely non-negotiable for protecting the integrity of your whole system. Moving on to the fourth pillar, security testing. Listen, having a fancy list of security controls written down on a piece of paper means absolutely nothing if you aren't actually testing them the way real hackers do. The RBI expects you to validate the real-world effectiveness of your defenses through regular vulnerability assessment and penetration testing, or VAPT. This means actively testing your web apps, hitting those APIs, and continuously reviewing configurations, not just putting on a show when an auditor comes knocking. And that brings us to the fifth core expectation: incident response and cyber resilience. We really have to acknowledge a tough truth here. You can never, ever eliminate 100% of risk. Breaches can and will happen to the best of us. And that makes your ability to rapidly detect, respond, and recover absolutely vital. Maintaining disaster recovery plans, ensuring business continuity, and actually running regular tabletop exercises, that is exactly what separates a minor operational hiccup from a total headline-making disaster.
So, the really crucial point here is understanding how these breaches actually play out in the real world. It's rarely some dramatic movie scene with a hacker finding one massive, glaring vulnerability. No, it's actually much more like a modern Trojan horse. Attackers exploit multiple, tiny, seemingly insignificant weaknesses. They'll chain these little hidden gaps together to build a path straight into your critical systems. And the scariest part? These are usually gaps that most companies wrongly think they already have totally covered.
Let's look at some real-world assessment data to see exactly what these tiny gaps look like. Basically, there are 4 main culprits. First, access. We're talking things like weak privilege management or super simple cloud misconfigurations. Second, app and API issues, where unsecured endpoints or poor input validations just leave the front door wide open. Third is remediation, which honestly often just means delaying vulnerability patches or totally ignoring an outdated third-party plugin. And finally, monitoring. Having incomplete logging pipelines or failing to actually correlate your security alerts. It's these tiny overlooked cracks that end up causing the most devastating breaches.
Okay, so how do we actually fix this and, comply with the RBI? Well, the guidelines lay out a highly practical roadmap to help transform your organization from vulnerable to fully resilient. Here's the first half of that journey. Phase 1, really identify your critical business assets and your data. Phase 2, conduct a thorough, honest cybersecurity risk assessment. Phase 3, perform a deep governance review, paying special attention to IT and board-level reporting. And Phase 4, execute that comprehensive VAPT testing across all your applications, APIs, and infrastructure.
And here's the second half of the roadmap to really lock things down. Step 5 focuses heavily on vendor assessment, so deeply evaluating your third-party tech providers. Step 6 is tightening up those access controls and your identity management. Step 7 is response validation, meaning actually testing your business continuity and incident response capabilities, not just writing them down. And finally, Step 8, continuous improvement. This is what cements a culture of continuously monitoring and upgrading your security controls. It's an ongoing living cycle, not just a one-time project you can forget about.
Now, before we wrap up today, let's talk about why this matters way beyond just avoiding some regulatory fines. If you take away anything at all from this explainer, please let it be this. Proactive cybersecurity is a massive business enabler. When you seriously invest in these 2026 guidelines, you aren't just making the RBI happy. You're drastically reducing your financial exposure, you're proving your operational resilience, and most importantly, you are driving deep customer trust. In a crowded fintech market, being able to demonstrate mature cybersecurity is a distinct, incredibly powerful competitive advantage. I want to leave you with one final thought, a really provocative question pulled directly from the leadership section of the RBI guidelines. I want you to ask yourself honestly, how quickly can you detect a cyber incident? Seriously, think about it. If you don't know the answer, or if that answer is measured in days rather than minutes, then it is time to urgently evaluate your operational readiness. The 2026 standards are already here, and the time to shift from that old checklist mentality to true cyber resilience, well, that time is right now.